Hi guys, welcome back to another video. So in the previous video we looked at how synthetic indices might be better than forex. In case you are struggling with forex trading, you might as well try synthetic indices. By the way, the brokers that I use both for forex trading as well as synthetic indices, the links are in the description box below. Then you can go ahead and sign up with them and try if you are able to make money with synthetic indices. So that is for people who are struggling with forex trading. So because we try to come up with balanced information in this video, I have to also balance it out and also explain how perhaps forex will be better than synthetic indices, so that when you make the decision, at least you have opinions from both sides. If you prefer forex better from synthetic indices, leave your thoughts in the comment section below. If you love forex trading and if you don't like synthetic indices, leave your thoughts and comments in the comment section below, and just share why you think forex is better than synthetic indices. Okay, so let's get into the video. So the choice between trading forex and synthetic indices basically depends on various factors, including your trading style, including your risk tolerance, your market understanding, and factors like that. So those are the things that will definitely help you to decide whether you want to trade forex or you want to trade synthetic indices. Myself, I've traded both, and I lean more towards the synthetic indices. Watch the previous video about why, but I do trade forex as well. Again, watch the previous video on why I also do trade synthetic indices. So one of the advantages of forex trading is in terms of liquidity. In terms of liquidity, it's not the same as volatility, but let me just explain our liquidity. Forex markets are very liquid. I think in comparison with the number of participants, I think forex has more participants than synthetic indices, because synthetic indices, I suspect most of them, they are being offered to countries that are not like the Western first world countries. Most of them are actually offered for countries like in Africa, in Middle East, in Asia, those countries. That's where I've seen most of the synthetic indices traders coming from. And in terms of volatility, synthetic indices, they tend to be so volatile that if you do not know what you are doing, you can quickly blow your account. But it also means that you can quickly flip a $10 account into something meaningful like that. You can I've traded volatility 75 index. I've traded boom and crash. You can quickly flip a $10 account into something meaningful, which sometimes you cannot do in forex trading. But in terms of volatility, it doesn't mean that because it's so volatile then it means that it's an advantage. It's a double-edged sword. You can make money or you can lose money with that thing. But volatility means a lot of opportunities to make a profit. That's why I also do prefer synthetic indices. And forex, yes, it's not too volatile, but it's well behaved, which means you are kind of safe when you are trading forex instead of synthetic indices. Then another major one is regulation. Many forex brokers, I'll say many because not all of them, I'll say many forex brokers are regulated by financial authorities in the countries that they operate in, which kind of provide some level of security and transparency, especially for us, the retail traders. This is a big question mark when it comes to synthetic indices, because the biggest offer, the biggest service provider for synthetic indices is Deriv, and we are not certain about their regulation. I mean, nobody knows how Deriv is regulated. They do say that they are regulated and that they are third-party authorities that make sure that everything that the algorithms do on the platform is above board. But who knows? Because basically Deriv is the broker and Deriv is the market. Whereas when it's Forex brokers, they are just a conduit of your trades, either to the market or to however they are doing it, if they are trading against you. But Deriv basically created synthetic indices, and they are the broker, and they are basically everything. So in terms of regulation there, and transparency there, and security there, manipulation and stuff like that, some people raise question marks there regarding synthetic indices. Then Forex also comes with a diverse number of currency pairs that you can trade. There are also many synthetic indices that you can trade, but the idea with many forex pairs is I've seen many people who try to follow fundamental news. They try to follow a lot of information that is happening in certain countries. You can actually use that information and trade your forex pairs, whereas synthetic indices, you don't really know how the algorithm is going to move. I mean, you can look at my screen. I'm in some profit, but sometimes it's not so good. I mean, I have to be open with you. Sometimes you lose money. I've lost money with synthetic indices. I've made money with synthetic indices. I've lost money with forex trading. I've made money with forex trading. Market hours. In terms of market hours, some people don't like the thing that synthetic indices, you have to be trading 24 hours a day, 7 days a week. Even on holidays, synthetic indices are open, whereas forex trading, we know, is 24 hours a day, 5 days a week. Then people take the weekend off and they come back and do it again from the Monday. So for some people, synthetic indices are for people who are addicted to trading. And some people say people trade synthetics don't realize it, but they've developed this addiction for just wanting to be in the market every time. That's why the synthetic indices were created, because they realize that there are some people who have developed an addiction for trading and cannot leave trading. They always want to be in the charts, in the markets, trading. So that's what some people say. It's what some people say. So some people prefer the markets where you trade 5 days a week, and then you go and relax for the weekend, you refresh. The idea about trading is also to give you time freedom. So if you're glued to the markets 24 hours a day, 7 days a week, where is the time freedom there? That's another argument for some people. Then in terms of forex trading has been around for quite some time now. So there's an abundance of resources, data, tools that you can use to actually make informed trading decisions. Whereas synthetic indices, you are not really sure of how the algorithm is going to move. You can try, as you're watching on my screen, I'm trying. That's me trying what? To trade the algorithm, but sometimes you are not guaranteed on how the algorithm is going to what to perform. Whereas in, for example, when I'm trading forex trading, I use my supply and demand strategies. Some people use Fibonacci, some people use moving average crossovers, and those things have been tested and have been proven that they do sometimes work in the markets. When price gets to certain level cycle in the market, people usually know that it's going to bounce because of the hedge funds and all those big banks and news, fundamentals, things that are happening out there in the real world. But when in terms of synthetic indices, you don't know which way the algorithm is going to go. That's why some people actually say it's actually very easy for you to make money with synthetic indices in the demo accounts, but in the real accounts, some people claim, it's claims from people. I said I'm going to balance out things with this video. It's claims by some people that you don't know how the algorithm is going to move. Most of the time it's probably going to try and take your money. It's some people's opinions, but people also do say that about forex trading, that there are always these stop hands manipulations by these hedge funds and big banks and stuff like that. So it's everywhere. So but in case you were thinking, is forex better than synthetic indices, yeah, I thought let me just balance out the video that I did. Which one do I favor most? Currently I'm trading 40% of my trading is forex and the other 60% is synthetics. So I'm leaning more on the synthetics side. Like I said, I've lost money, but I've also made a lot of money with these synthetics. So in forex trading, I've made money in forex trading, but I've also lost money in forex trading. And sometimes I would think I might do another video. It's getting longer now. Why I probably am leaning more and more towards synthetics. Guys, what are your thoughts? Leave them in the comment section below. I'll see you in the next one.